Hi, good afternoon. Welcome to the marketplace. Coming up this afternoon, Ghana slowly retracing steps back to the path of macroeconomic stability. We hear from professional services firm Deloitte. Also coming up, government fails to achieve its treasury bills target narrowly as demand for short-term instruments remain flat. Plus, with just 2 days to Christmas, we check how hoteliers are gearing up to do good business. My name is Darryl Kwan. Thanks for being with us. Details coming up. Well, thanks for staying with us. First up, Ghana is slowly retracing its steps back to the path of macroeconomic stability as the government's fiscal consolidation and debt restructuring activities are bearing fruit. That's according to professional services firm Deloitte. Deloitte revealed in its West Africa in Focus report that the country is estimated to grow by 4.9% in 2024, with further expansion of 5.1% next year. Here's more in this Business Desk report.
The professional services firm said the improved economy will be on the back of the government's debt sustainability initiatives, a more stable local currency, and a deceleration in inflation. The deceleration in inflation, it's alluded, would trigger further interest rate cuts that began in 2024 and lead to lower borrowing costs. This should drive increased private consumption and investment spending, which will boost economic growth. Ghana's December 2024 election were relatively peaceful, with the outcome resulting in a change in government and party. Deloitte said President-elect Mahama will inherit an economic challenge by high inflation, currency weakness, and debt concerns. However, it pointed out that Mahama's economic policy will likely focus on, but not be limited to, fiscal discipline and strategic investment in infrastructure. Deloitte also enumerated some downside risk to Ghana's projected economic growth. These include commodity price volatility and adverse weather conditions, local exchange rate shocks, and volatility.
All right, for more on this, I'm joined on Zoom by Associate Director, Deloitte Ghana, Dennis Brown. Good afternoon to you. Dennis, what's the basis for this assessment by Deloitte, and what does this mean for our economic recovery efforts?
Okay, all right. Thank you, Darryl, and good afternoon to your listeners and viewers. I think that this is not a straight outlook at all. It's the same projection that we've seen from other credible outlets like EIU, Bloomberg, IMF, and I think it's been down to the discipline that the government has assumed whilst being on the IMF program. I think that is one. And also we've seen the economy achieve some notable growth, particularly this year, even whilst being on the IMF program, which is also something that needs to be called out because whilst being on an IMF program, one of the key things that are required to do is to moderate, government expenditure. And where government have had to moderate their expenditure, it means there's been restrictions, to the extent to which you can roll out your programs and policies to, influence economic growth. So being able to find that balance to achieve that growth is commendable. And the other side has also been the fiscal discipline that has been brought about largely by the IMF program. And we've seen this in time past. Whenever we've been on IMF program, we've seen this sort of macroeconomic stability. It is what happens after we get off the program that really becomes telling. Yeah.
Yeah. Well, while the outlook looks positive, Deloitte says the new government, the Mahama-led administration, will be inheriting high inflation. There's talk about our debt crisis, also the currency weakness as well. Now, we've had this government tout that we are back to the COVID-19 levels. How do you reconcile these two?
Well, I don't think there is any inconsistency. I don't think there's any inconsistency there. I think, of course, as a government would do, they will tout their achievements, seeing the growth that they've posted and all that. But I don't think anybody should be of the view that we are out of the woods yet. You know, it's slow, but sure, we are still in the woods. There's still high inflation, around 22%. Exchange rate is still high, although it's stabilized over the last 2 months. So those pressures are there. And so it's true that an incoming government is going to inherit, these pressures and would have to deal with it. I mean, it requires careful steering till we come out of the woods or out of the IMF program. I think the incoming government have also mentioned that they are going to look at whether there's room to renegotiate the IMF program. As to the components that they want to renegotiate, we cannot tell whether it's for more money to get off the program sooner than expected, or to create space for certain homegrown policies to be, rolled out. We await firmly to see how they are going to proceed on that basis.
Right, and based on the report, we expect that the economy goes by 5.1% next year. What should the Mahama-led administration do next year to attain this goal or accelerate growth?
Yeah, I mean, they have their own policies, some brilliant policies when you look at the manifesto. In fact, two leading parties, when you look at their manifestos, it tells clearly that they understand what the challenges are, and they know the policies to roll out to deal with those challenges. Normally, the issue is around the rollout or implementation of the policies and how it's guided. Now, with the IMF program in place, the IMF does not provide any restrictions on the rollout of homegrown policies per se. I think what it does is to encourage measures that increases revenue and moderate government expenditure, right? And so the restriction comes in where you now want to roll out certain homegrown policies, which of course will cost money and therefore will impact expenditure, but perhaps may not result in immediate impact. Then, your fiscal space is immediately impacted. So that balancing act is what they need to pay attention to. One, how to innovatively generate revenue, create more space for them to increase the various policies that they plan in their manifestos, and that eventually should lead to some growth. I think it's the balancing act for me, considering where we are in terms of being on the IMF program and the fiscal targets that we are expected to achieve whilst being on that program.
What are the downside risks to look out for as we head into a new year?
I think, we still have an economy that's largely dependent on commodities and therefore the international commodities market. So the commodity prices is one where price developments in relation to commodities in the international markets are not favorable. Then, of course, as exporters of these commodities, we are likely to face the adverse impact by way of lower inflows, if you like. Also, we see the new government coming and the expectations are very high. When you look at the emphatic nature of their victory, people expect things to start easing immediately. Expectations are very high, but from my experience and from what I know, I think it's going to get a bit tougher before start getting easier. And so people should manage their expectations, but not everyone is like me. So expectations are really high and can result in some type of social unrest further down the line. Maybe in your third year, you're not seeing the improvements, you are making the investments, but it will take a while for it to yield the fruits, and then the cries will start. So social unrest around expectations not being met also can prove to be somewhat fatal. Also, exchange rate pressures, they are always, with us, the imports, to the extent that the problems of our economy is structural. We are having to deal with significant amounts of imports because the structure of our economy has not changed that much. That is also a real risk that is there. It has a pass-through impact on inflation, which affects cost of living, affects cost of doing business as well. So those are real risks to achieving the economic stability and growth that we foresee.
All right, thank you so much, Dennis Brown, Associate Director, Deloitte Ghana. Say hi to our little friend who wanted a spotlight on national television. We can understand, it's Christmas, everybody's at home. And Merry Christmas, we'll speak sometime soon.
Thank you. Merry Christmas to you and your viewers.
All right. Dennis Brown there, Associate Director, Deloitte. Now, Christmas is just 2 days away, and we want to check in on how the hospitality industry is gearing up for the festivities. Joining me on Zoom is President of the Ghana Hotels Association, Dr. Edward Akanyamike Jr. It's been a long time. Good to speak with you this afternoon. How are things shaping up?
For the opportunity, and Merry Christmas to you and the team. Well, Darrell, as I always say, hotels are always prepared to provide accommodation and other services to their clients. But when it gets to periods like this, then we go the extra mile to do the extras for our customers. So we are looking to provide a high standard accommodation, and then we are also looking to host events like conferences and the parties and the marriages and all that. Now, the timing too is good. We've just had a very successful election, and I'm sure people would want to find ways to jubilate and celebrate it, and I'm sure they're going to find their ways to the hotels to do that. And of course, it's Yuletide, and certainly people are going to celebrate it as well, plus the end of the year as well. So there's a lot going on, which will make the hotels very busy. And I can assure you that a lot of the hotels are very prepared and ready for it.
Do you get the sense that the public is willing to spend more this year compared to the previous year, especially when the government says, well, the economy is back on a strong footing?
Exactly, Daryl. You know, we just have to compare it to 2 or 3 years back, and even last year, where I must say that the indicators were quite dodgy, and so a lot of people were very careful about their spending. But it's a bit different now. You can feel it in the air that things are a bit different now. And then linking it to the successful elections, which of course has put some calmness in a lot of hearts. So I'm sure people will go the extra mile. How they're going to get the money, I don't know, but they'll certainly find a way to celebrate it.
Well, at least there's some positivity there. There's some optimism. So what are the innovative strategies hoteliers are adopting at this time to get people to come around and do some good business?
Daryl, it's marketing, marketing, marketing. And of course, plus some strategic partnerships with some tour operators, partnership with some car rentals, partnership with corporate bodies. You know, these days, a lot of the corporate bodies have gone into some MOUs with the hotels, and so the corporate annual parties that they host, they take it to the hotels. And then also of the hotels are stepping up their customer service for periods like this, and also the decor alone itself, it's attractive for you to want to have your program there. So they are doing all these things to ensure that their clients come to them. But Del, before you go, let me quickly chip in this. I'm sure you read the 2023 GTA report, which sort of attributed some of the accommodation to the Airbnb, which we've been talking about. I'm very happy to say that the GTA has finally come out with some regulatory process for the Airbnb.
That's
which
interesting.
Means that going forward, there's going to be some regulation of that space. It will take time to ensure that whatever applies to the hotels also applies to the Airbnb, but at least it's a good start. Because last year, it was around December that we got that information that the Airbnb are taking some big chunk of our clients during the Yuletide. Okay, so I'm happy that some regulation is going to that space so that there can be a more competitive and fair grounds for all of us to provide accommodation services to clients.
Well, thanks for the heads up. We'll look into those regulations, see how that is going to impact the hospitality industry. I want to talk about, listening to you, it sounds as though 2024 was a real good year for you compared to the previous year, at least pre-COVID-19. Just give us your assessment, what your expectation is of the new government. Already it's been talking about reducing taxes. I believe this is a headache for every business. What are your expectations?
A lot, Darrell. And to put it in perspective, I indicated that we made some input into the two major leading parties' manifestos, the NPP and the NDC. NDC is in power, and the game is very simple. We are simply going to hold them to their manifesto promises, a good part of which we contributed as an association. In fact, we met a team from the NDC, and we looked at the challenges facing the industry, and I must be honest with you, they captured quite a chunk in their manifesto. So we are simply going to hold the incoming government to their manifesto promises as it is in their document. And I'm sure once they go with that, I'm sure things will go. I must also say that quite a lot has gone into the industry in the past 8 years. We cannot ignore that. There's been some significant improvement in the industry over the past 8 years. And if the new government should take it from where this government is living off, it's going to be a win-win for Ghana. And that's what we are all looking for the tourism and hospitality industry to contribute its quota to the development of the country. So we have a lot of expectations, but it is based on what they promised. It's based on an input in their manifesto, which they have captured it very well there. And we're just going to ensure that they go by it.
All right. Great to speak with you. And Merry Christmas, Dr. Edward Akanyamike Jr. He is president of the Ghana Hotels Association. You wanted to say something?
Many happy returns.
All right. We'll speak later. Thank you. You're watching The Marketplace. We will be right back. Welcome back to The Marketplace. Time now for your financial markets update. The government failed to achieve its target for treasury bills narrowly as demand for short-term instruments remained flat. That's according to results by the Bank of Ghana. The government fell short of the target by 58.11 million cedis. Here's more in this report. According to the results, all the bids were accepted. A chunk of the bids came from the 91-day bill, with about 4.02 billion cedis received. This represented 73.73% of the total bids. For the 182-day bid, about 867 million cedis were tendered. The 364-day bid, however, saw bids worth 508.6 billion cedis tendered. Meanwhile, interest rates continued to inch closer to 30%. The yield on the 364-day bill surged to 29.95% from 29.94% the previous week. The yield on the 91-day bill increased by 8.0 basis points to 27.85%. For the 182-day bill, the rate went up to 28.57% from 28.32% the prior week. Let's turn to the stock market. The share price of MTN Ghana is expected to go up this week on the stock market. This follows increased demand for the shares by investors. Joining me on Zoom is stock market researcher Bertha Atubiga. Good afternoon to you. Bertha, talk to us about how trading went last week.
Okay, thank you very much. And I remember last week when we spoke, I said I was very optimistic that MTN was going to go up this week, actually. The past week anyway, that by 7 pesos on Tuesday, and then before the close of the week again on its value. If you look at MTN Ghana right now, it's currently recording a year-to-date gain of 77.9%, going up by 11 pesos within last week. And as we speak now, MTN Ghana has gone up further on the stock market again, adding a peso. It's gone up by 0.40% on its, that's a peso, and it's now priced at 2 Ghana cedis, 50 pesos per share. And apart from MTN, we also saw equities like Total Energies Marketing Ghana add value to investors' capital last week. It went up by 0.38% to with the share price pricing at 13 Ghana cedis, 12 pesos. And we also saw new gold exchange traded fund go up from Tuesday to Thursday. We saw the equity from Tuesday, it was 392.08 Ghana cedis per share. And as of Thursday, it was trading at 409 pesos per share, and 401 pesos per 401 Ghana cedis per share, sorry. So that's what's been happening on the stock market. MTN has been dominating in trading volumes on the stock market, and we've also seen CalBank also trade quite a number of shares last week on the Ghana Stock Exchange. And GCB also went up last week on the floor of the market, and is also one of the equities that's added value this year to investors' capital. And if you look at GCB, last week it went up by 0.31%, and then the share price is at 6 Ghana cedis, 37 pesos per share. We didn't see it move much. It was only on Friday. It went up by 2 pesos to close at 6 Ghana cedis, 37 pesos. So the market capitalization, that's the worth of the exchange, actually ended last week green. We saw it close the week at 110.7 billion Ghana cedis, and we also saw the major indices that were 24.74% respectively.
Right, and what's your money on this week aside from MTN shares?
Well, I'm looking at the total the oil sector. That's Total, and then probably go also doing some magics this week on the stock market. But don't forget that we are going into the festive season, and probably trading volumes might reduce after or during the festive season. During the festive season, we see any trades that reduce on the. So apart from MTN, I'm still looking out for probably Total and then Go doing some magic on the stock market this week, and maybe Cal. Let me put my bets on Cal. Maybe a very marginal appreciation in CalBank this week as well.
Okay, Bertha Tubiga, stock market researcher, thank you so much for joining us. As the year draws to a close, we'll have a conversation around how the market has fared throughout the year. I'm sure we'll have a special edition where we can have some more time to discuss all of that. But for now, we appreciate your insights. Before we go, the manufacturing sector attracted more than 50% of projects registered with the Ghana Investment Promotion Center. These projects came in the form of foreign direct investments for the first 8 months of this year. Here's more.
Sure, thank you.
The Ghana Investment Promotion Center recorded from January to September this year, 55 of them went to the manufacturing sector. In monetary terms, this was worth $190 million. A significant portion of the more than 12,000 jobs that will be created will come from the manufacturing sector. Majority of these projects were concentrated in the southern part of the country. China also topped the list when it comes to the origin of these foreign direct investments. The third quarter investment report showed that about $31 million was also brought in the form of additional equity by these investors. The Ghana Investment Promotion Center has promised that it will be working hard together with its partners to bring in more capital in the coming months.
All right, and that's it for the marketplace. More news on our website, myjoyonline.com/business. Head there for the day's latest stories. My name is Daryl Kwao. Thanks for watching. We will be back same time tomorrow.